Hello and welcome back to All Things Money. I'm your host, David Blain. Thank you for joining us for this second segment today. As we record this November the 1st, 2011. The first segment, we talked a little bit about Greece's surprise announcement that they're going to hold a referendum on the austerity measures passed by the Troika of lenders, the European Banking Commission, the IMF, and the European Banking Consortium that agreed to an austerity plan for Greece. Anyway, the Greek Prime Minister decided that he's going to have the public vote on it, and the point of the first segment was just to remind you that when in investing, increasing government involvement into the markets, the financial markets, has thrown a lot of things into this uncertainty era that we have today, because typical financial models and what people are used to, normal reactions, they change as government involvement gets more involved in the markets. It becomes increasingly difficult to determine what direction to take. So whatever your political views on the matter, whether you think it's right or wrong, the reality is increased government involvement in the markets is probably here to stay, and we need to come up with some better models to try to incorporate that into our investment planning. I wanted to talk a little bit this segment about a company called MF Global. I talked about this before. A lot of times you see in the media, the talking heads on CNBC, so-and-so running this hedge fund or this mutual fund, and they made all these, billions of dollars. They're the hot hand. And generally what they've done is they've taken a big bet on a certain segment of the economy. And this traces all the way back to since the days of investing began. I won't bore you with the details, but Jesse Livermore back in the 20s was a famous stock speculator. And we had the Hunt brothers making big bets on silver in the 70s. And it goes through to a man named John Paulson, who made a big bet against the housing industry back in 2007, 2008, that I chronicled on this show several months ago, about how he made, I don't remember, $5, $10, $15 billion in 1 year betting against the housing market. I did a follow-up on that a couple of months ago on Mr. Paulson, who went out and obviously now is able to attract a lot more money than he could betting against housing. Now he's sort of famous and supposedly the man with the hot hand, and so now he runs a different hedge fund and has made several big bets. And I announced on the show recently that the latest numbers, I think year to date, as of the summer or something, he was off, 10 or 20%. I don't remember the exact figures. But the point is that chasing the hot hand, especially these hedge fund managers that make huge bets one way or the other, is generally a bad strategy. We saw that with Madoff. Of course, Madoff was all outright fraud. But the point is, he was sort of this luminary figure on Wall Street, and he promised these big, steady returns, and it's not there. So anyway, here we go again. New York-based MF Global, who's run by former New Jersey Governor John Corzine, who was also a senator, the head of Goldman Sachs, who became the New Jersey governor. After that, he decided to run this company, and from what I understand, MF Gold was about a 200-year-old firm. Mr. Corzine, who formerly run Goldman Sachs and was a U.S. senator, then the governor of New Jersey, ran the company to the ground and is now filing for bankruptcy. Once again, he did it by making a huge bet on European debt through the use of leverage and not diversifying and betting on singular events is a good way to blow up your investment portfolio. We saw this long-term capital management back in the late 80s. They were running a strategy that essentially made bets based on the movements of currencies and some other things. It was supposedly a low-risk strategy, but when they piled leverage upon it, it also blew up, and that was run by the folks that had won the Nobel Prize in economics for some of their work in modern portfolio theory. So here we have a former New Jersey governor, former U.S. senator, former head of Goldman Sachs running MF Global into the ground based on bad bets on the European debt. The story that came out today was that hundreds of millions are actually missing also from his brokerage firm, that it says the discovery of missing millions stopped a last-minute deal to sell a major part of MF Global to another brokerage firm, the New York Times reported. They filed bankruptcy. They were trying to sell a variety of assets to Interactive Brokers Group, that there were possible deficiencies in the accounting of their funds. Another symptom of some of these hedge funds is that as they get bigger, they make these big bets. They just have a hard time keeping track of the millions of dollars. We saw this with the European bank derivative traders. I think it was Credit Suisse or somebody. Their trader lost billions of dollars, and they just simply lost track of the money for a while. He was able to cover it up. And so you see this at these large firms sometimes, that things just start spiraling out of control, so to speak. So anyway, MF Global filed for bankruptcy, and hundreds of millions are missing. Once again, I'm not a big fan of these hedge funds, especially what I call the hot hand hedge fund. The guy that made billions of dollars last year is a pretty good way to lose billions the next year. So we're coming up on another break. So for All Things Money, I'm your host, David Blain. We'll be right back.